What's up, everyone? It's Caddy with MoneyVest. So markets here very flat on the day. On the week, they were slightly higher. They were slightly green on the back of the FOMC meeting. So we've got lots to unpack in this video, considering that we did go up on the week, up a little bit over 2% on the S&P. The NASDAQ was green, also up over 2.8, almost 3% to close out the week here. And of course, semiconductor stocks, chip stocks also having yet another positive week here, up over 4.5% this week, with SMH pushing up another 0.5%, with a lot of individual stocks and big tech and Magnificent 7 companies were green on the week. But again, some of them like Tesla and Apple struggling on the week. So hope you all enjoy this video and find it helpful. Make sure that you drop a like and don't forget to subscribe to the channel if you're just joining us for the first time. The links to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the members only private videos, including all the trade alerts and trade ideas and options alerts and newsletters, and the moneyvest.com website that's going to be available very soon here for all the members only. So again, we've got a 16% annual discount available until the end of this month. We'd love to have you on board with the link down below. Now, this right here is the market's overview. So NASDAQ pushing up 16 basis points. S&P is down 14, and the Dow Jones here just under 39,500, selling off a little bit more than the other sectors or indices, I should say, 77 basis points lower. This right here, stocks valuations continue to creep up with a forward price to earnings multiple trading now at 21. And this is something that we have talked about on the channel before. I've shown you kind of like this market temperature, the overall spreadsheet for S&P 500's valuation, and what you'll notice is that the earnings yield is now sitting at just over 4.3%, because if you do the math here, forward P multiple of 21, if you do 1 divided by 21, we're looking at 4.76%. So 4.76% is the current earnings yield on a forward basis. If you compare that to the 10-year treasury, so US 10Y, that's sitting at 4.2%. So that 50 basis points is still the risk premium that we are getting for investing in equities versus investing in fixed income. But we are approaching those levels of 22, 23 forward earnings multiple from back in 2020 and 2021. That's exactly when we basically saw the bear market beginning in 2022. We saw that significant decline, and now we're starting to see the valuations creep up to those levels once again. So keep a close eye on these sort of multiples, because at the end of the day, markets are just a component of a price and earnings. If earnings don't hold up as well because of the higher interest rates, or if they start to show some signs of weakness, then the valuation can all of a sudden jump to over 22, 23, even as high as 24 levels. And of course, we haven't seen forward P multiples of 24, 25 in a very long time for the S&P 500. Prior to 2000, we actually did see those levels. That was right around the dot-com bubble as well. Now, shrinking the Fed's balance sheet. So we have seen, consistent shrinkage of the balance sheet from the Federal Reserve as they continue to roll off their mortgage-backed securities and U.S. Treasuries. So Fed's second round of QT has started in the June of 2022, and it's now continuing. We did see a little bit of a spike here, as you can see, as the Federal Reserve did provide support to the banking sector, along with Silicon Valley Bank failure and a lot of other banks that were going under here at that point. The Fed did provide some liquidity, and we did see that reversal back to the upside, and then shrinking once again back to normalizing the Fed's balance sheet at sitting at just under $8 trillion once again. Now, the underlying U.S. inflation stays elevated. So so-called core CPI topped estimates for a second month, reinforcing a cautious Fed. We already covered the inflation numbers before. We talked about the unemployment numbers. We've talked about a lot of different scenarios with respect to the Federal Reserve, with respect to interest rates and inflation and economic growth as well. Economic growth remains strong. Inflation continues to come in a little bit hotter than what the expectations are. So in other words, stays elevated compared to the Fed's target. And the Fed itself, the FOMC, and yesterday we also had the Fed Listens event, which was also very important, because there's a lot of people from different organizations, from nonprofit organizations, CEOs and presidents on the panel talking to Governor Bowen and talking to Chairman Jerome Powell, kind of addressing their concerns. And a lot of the concerns were really just around food prices and how food prices continue to be super elevated. And as a result, there's a lot of malnourishment happening among kids and among children, where a lot of these nonprofit organizations need to step in and provide proper resources and care to families and to children as well. So food prices continue to be elevated. Gasoline prices are going to start moving back higher, in my opinion, considering how high energy prices are now. Back over $80 a barrel. We've seen a 20% rally in 2024. Not to mention shelter prices and cost of housing and rent also is a little bit of a wild card and continues to be a bit of a problem. Now, when it comes to the tech fund flows, weekly and a 4-week moving average, we did see a bit of a decline this past week. So coming down. And investors somewhat lighting up on their positions in technology because of how much momentum we've seen in technology in general. So you can see that even today, Google pushing up 2%. We got Amazon, Apple, Meta, and of course, NVDA very much green. And these were the only stocks and sectors that were pushing higher. Everything else was somewhat down in the red or somewhat flat. This right here is the entire market. So you'll notice in the last 1 day, comm services is still leading the charge here with Meta and Google pushing higher. Technology and utilities pushing up. Everything else, all other sectors were red. In the last 1 week, everything is green. In the last 1 month, everything is green except for healthcare. In the last 3 months, real estate is the only sector that is down. Everything else is pushing higher. Cocoa prices, orange juice, wheat, oats, everything pushing up with feeder cattle, platinum, soybeans oil, palladium, everything selling off. And we got Bitcoin here just over 63,000 and Ether just over 3,300 as well. Now, what the Fed officials are hinting about rates in the long run. So in the long run, as we already know, the Fed has already pointed to the idea that rates are going to be lower. So if you look at 2026 and beyond, they're expecting rates to be just over 2.5%. Now, that's a good thing. That's a good thing because cost of borrowing is going to come down. Like I've been working with a few mortgage lenders here, getting quotes on a lot of different interest rates and a lot of different point system. And they are, again, coming up with a lot of different sort of options available for borrowers given the rate situation today and given the future expected rate situation with respect to variable rates and fixed rates and, EIBOR. So like there's a lot of different types of products that are available depending on what rates are going to do. But again, at the end of the day, no one really knows where interest rates are going. And that's why I've mentioned before time and time again that our job and our responsibility is to be prepared for all potential scenarios and not just one, right? We can be betting on this idea that, okay, rates are going to be lower in the next 6 months. Or we can be betting on this idea that, okay, the economy is going to go into a recession in the next 12 months. Our job is to be prepared for regardless of the outcome, whether rates get cut, whether they're increased, whether there's a recession, whether there's a bull market, whether there's a bear market, whatever happens, we are ready. We are prepared for all scenarios because that's the only thing that's really going to give you that peace of mind that doesn't matter what happens in the economy or in the market, you are prepared to take advantage of it in any way you see fit. Now, moving over to the S&P 500 and NASDAQ, before we go there, volatility here, once again, at really, really low levels. We're back down to 13. So, gotta be super cautious here, be alert, not saying to dump your stocks and start going short, but of course, be ready. I personally raised enough cash because of selling calls. There were some of them were in the money that got my shares called away. So, I do have plenty of cash on the sidelines sitting to deploy if and when the volatility does spike here beyond 15. To as much as 18 to 20 levels. So if we do get up to that level, then that obviously is going to be a good positive catalyst for us to dollar cost average into the market, because when the VIX is high, it is time to buy. And we haven't really seen the VIX being high for a very long time. The last time you witnessed that was back in October of 23. So just got to be super ready, be careful, be alert. And when that happens, I will be sending out a lot of alerts. I will be ready to deploy a lot of cash back into the market. So again, link's going to be down below if you're interested in joining our MoneyVest community. You get Discord access with all the channels and all the trade alerts and the trade ideas as well. Talking about Ether, continues to sell off. So this right here is going to be a bit of a resistance at 3,500. Which we will continue to monitor, and support level is going to be inside this green rectangle sitting roughly at 2,100 to as much as 2,400. So that right there is going to be that support level to watch for Ether. And for Bitcoin here, also selling off from that resistance of 73,000. So selling off, and that next support is going to be inside this green rectangle sitting roughly at 48,000 to as much as 51,000 for Bitcoin as well. So we're seeing a little bit of a pullback, which again is normal considering how overbought both cryptos were. Now coming over to S&P 500 and the NASDAQ. So this right here is going to be SPX as it continues to see this blow off the top off rally. New all-time high sitting at well over 5,200. So strong close on the week here. And support level, as we've already discussed, there was at least a lot of consolidation sideways. And then we got a nice breakout after the FOMC meeting. We got a little bit of a gap up here on the day today. So we came down to somewhat fill that gap. And support level now is going to stay put at 51.85, 51.87, down to as low as 5,060, 5,050, and a much stronger support along the lines of those moving averages. 100 SMA at 4,800. 4,800 by far the best support to watch for the S&P, and that's going to lead us to a potential correction of about 8%, which again, a little bit unlikely given how strong the momentum is, given how much money is sitting on the sidelines, but something to still keep in mind and be alert about. Talking about the NASDAQ, again, just consolidating sideways inside this red sort of rectangle. That's a range of resistance that we have talked about on the channel in the past. And even though we are making some very nice higher lows, so this right here can be considered as very nice potential higher lows here for the NASDAQ, consistently making higher highs and higher lows and, just pushing higher. But support level is going to stay put inside this green rectangle along with that 200, 100 SMA sitting roughly in between that 14,300 and 14,500 points on the NASDAQ. And the second support, SR2, is going to be all the way down to 12,800 for the NASDAQ as well. So those right there are going to be very important few support levels to keep in mind for the NASDAQ. Starting with Apple, and Apple here still consolidating sideways in that range inside this green rectangle. We did see a little bit of momentum carry forward, but then of course the catalyst of DOJ suing Apple comes up and Apple starts selling right back down. And the next resistance and target is going to be all the way up to 194, 195 for Apple moving forward. So that is going to be that target. And like I said, support level inside this green rectangle all the way down to as low as this support at 153, 154 for Apple moving forward. So those right there are going to be few levels to keep in mind for Apple, with a resistance and a target up to 195, 196 for Apple moving forward as well. Talking about Amazon, and Amazon here, resistance is going to stay put at close to $179, $180, and support level is going to stay put at $159, as we've already discussed. A lot of consolidation sideways for Amazon at those prices. 188 is going to be that next resistance beyond the 178, 179 if you do get that breakout. But of course, we're starting to see a little bit of that, consolidation sideways with that negative divergence that also is playing a big role for Amazon, and support level is going to be staying put at close to 158. Talking about Tesla. And Tesla here also going through a very similar process of selling off of lower highs and lower lows. So this right here is actually going to be a much better chart for Tesla. So again, we did see a little bit of a bear flag breakdown, consolidating sideways at 150s again. Oversold RSI and MACD still within the context of a bit of a downtrend. So again, lower highs and lower lows, as you can already see. Massive amount of resistance sitting at around 180 to as much as $200 per share. If Tesla is not able to break out of 200, I'm afraid we may not have a lot of upside, at least not in the short term, because we need to see a breakout over 200 for Tesla to regain that momentum and potentially trade back up to 240s. So that is going to be that next resistance. But right now, we're very much in the context of this lower highs and lower lows and in this downtrend. Talking about PayPal, and PayPal here continues to perform somewhat well, but of course down 2% on the day today, getting rejected at this resistance yet again at $67, $68. So that is going to be a level to keep in mind, and support level is going to stay put at $56, $55. Coming up to an overbought RSI 61, and MACD also been pushing higher. So I wouldn't be surprised if we do get rejected here at this resistance where we have previously gotten rejected as well. And that, again, like I said, is going to be a resistance at $67 with the support at 57. A breakout beyond this could send us up to 77. That's going to be that next level to keep in mind. Visa with a little bit of a pullback, rightly so, because there continues to be a negative divergence here. Did see some profit taking on the day today. Support level is going to stay put at 270 at 279 for Visa. And of course, a breakdown below this level is going to be all the way down to $245 to $250 for Visa. So those right there are going to be some levels to watch for Visa here. And again, we continue to validate some of these higher lows, some of these higher highs. And like I said, support level is going to stay put at 279 at the moment. Talking about Meta platforms, the Meta here consolidating sideways yet again. Resistance going to stay put at 524. Near-term support down to 450 with a little bit of a gap to fill also, all the way down to $384 to $385 for for Meta as well. So those right there are going to be some support levels to keep in mind. Lots of consolidation at the moment. NVIDIA, on the other hand, continues to break out to new highs. I mean, this can be considered as a little bit of a bull flag. So what you'll notice is that we are seeing a lot of consolidation sideways in that range, and then of course a breakout to the upside beyond $940. So support level is going to stay put roughly at 822 and 745 for NVIDIA, but we're hitting a new all-time high. So again, congratulations, almost a new all-time high. So congratulations to everyone for NVIDIA here. Now, Advanced Micro Devices is already at a very nice support along with those moving averages, although we are starting to, I believe, just sit above that 50 EMA. So we'll continue to monitor how NVIDIA trades here, considering how that it's oversold. MACD's been selling off, and the price action itself sitting right above that 50 exponential moving average. So in my opinion, this is what a dip buying opportunity looks like. And for AMD, that's where the validation is. That's where the stronger support is. So if it does validate that level, it has potential up to 21% potential gain once again here as it trades back about $195 to $200 per share, and beyond 210 and 215s as well. So those right there are going to be some levels to keep in mind. Talking about Netflix here, so Netflix on the day also just consolidating sideways, sitting right about that resistance, acting as a support at 624, 625. And the next target is going to be up to $697, almost $700, with the support level inside this green rectangle for Netflix, along with that 100 simple moving average of 575 as well. Google continues to rally higher, 151, 152. So that's really where we are at the moment. So very nice, move to the upside. We did have a trade idea on Google that played out very nicely. So again, link's going to be down below if you want to get access to our high quality trade setups and ideas that we are putting out for all the members that they can take advantage of. And right now, Google is certainly coming up to its overbought level. Lots of resistance sitting all the way up to 154, 155 for Google as well. And last but not least, we got Microsoft, Enphase, and Costco. And Microsoft here pushing up to almost new all-time highs again. Very nice breakout from this consolidation. Support level is going to stay put at 397, resistance up to 420, and of course getting a little bit of a breakout to the upside from those levels as well. And then finally we got Enphase. Enphase also seeing a lot of consolidation sideways, $114. Support level is going to stay put at 109, with a resistance and a target up to 137. That's a double top resistance where we got rejected for Enphase in the past. And finally we come up to Costco. Costco seeing bit of a pullback down about 1%. I would not be surprised if you do see Costco trade down to 670s, although there is going to be some support in the 711s. So this right here is going to be a decent size support here, validated a couple times in the past, all the way down to as low as $680 in terms of that support. Now there is a brand new indicator that I want to introduce to everyone, and that is going to be this right here. This is the L3 whale indicator or banker indicator. What this shows us is how the momentum, how big the orders are coming in for that stock, and the green bars essentially mean that we're seeing a lot of institutional buying activity. A lot of the whales are starting to buy, and then the red ones obviously is the opposite, that they are starting to sell or exit out of their positions. And again, you can see it kind of works very similarly to an RSI of how overbought, oversold it becomes. But right now you'll notice that Costco, since it's been selling off a little bit, we have seen some institutional or big bankers or whales basically exiting out of their position. And if I show you PayPal's been quite interesting, because PayPal's been seeing a lot of momentum to the upside, even though it's been consolidating for a little bit. This right here, we've seen a lot of momentum coming in on the back of some big whales and big banks kind of putting in their orders, and they're the ones that are actually buying here. They were buying over here as well. If I take a look at NVIDIA, they were buying, but they're no longer actually adding to their position. So this right here was the last time we saw some green bars. And then after, I would say, January 30th, 2024, it's really just been a hold situation for a lot of big whales and institutional investors when it's rallied over 56%. So if they start to really lighten up their position as they have done in the past, so as you can see that this right here, every time the bankers basically, or the big whales I should say, were lightening up their position or selling off, look what happened to the price action. We did see a couple sell-offs here. And then, of course, another one over here as they were, again, selling some stock. But until then, that was the last time we actually saw or witnessed some immediate sell-off. But until after that point, we haven't really seen anything that aggressive. So just got to be super careful, because if we do start to see some whales kind of take some profits, institutional investors start selling, then of course that can lead to NVIDIA stock also selling off further to the downside. But PayPal is a little bit of a different story, as we are seeing more and more buyers stepping in on an institutional side. But again, it's kind of happened in the past where they have bought, leading up to that potential momentum and that gain, and then of course sell right back down, then push higher, then come down, then push higher, then come down. Then this could also be just one of those things where, it pushes up, and then if there is some selling pressure from that double top resistance, it's possible that it starts to roll right back down for PayPal once again. But of course, that is yet to be seen. Tesla here, on the other hand, did see some momentum prior to this sell-off that we are witnessing. But of course, if we start to see some momentum come back in, some institutional investors and big whales start deploying money back into Tesla, then there's potential for us to see a breakout beyond $200 per share. But that needs to happen in order for us to see that momentum higher, because price action is very much dependent on demand and supply. And if there's no demand, price is not going anywhere. So hope you all enjoyed this video and found it helpful. If you did, make sure that you drop a like, and of course subscribe to the channel if you're just joining us for the first time. I would really appreciate each and every one of you. Link's going to be down below for that 16% annual discount available until the end of this month, and all the members who join us are going to have the private beta access to our moneyvest.com platform, and then eventually we are going to be doing a bigger launch for everybody on YouTube as well. So thank you so much for joining, and as always, happy investing. I'll see you all in the next video.